Welcome back. You're watching Stock Picks. Today we unpack Italtile, Cashbuild and Build It. And bringing us that analysis is Chantal Marx from F&B Wealth and Investments. Chantal, always a pleasure and a good afternoon to you.
Hi, yes, it's great to be here. Yeah, I thought that this was such an interesting story because earlier this week we had really a big improvement in business confidence, but particularly driven by hardware retail. And that made me think, well, maybe we should finally revisit some of these unloved hardware retailers that we have floating about on the JSE.
And actually, when we think about these hardware retailers, there was that COVID boom, a DIY boom, and nothing's been the same since, Chantal. So let's also talk about that market that has changed quite a bit.
Yes, so I think one of the reasons that we've seen a lot of pressure over the last 2 or 3 years has been that inflation has been very high, interest rates have increased, and disposable income just isn't there. So I think particularly from a residential project perspective, and people taking on their own projects at home, the money just simply hasn't been there. And I think for corporates, it has been very similar. For big developers in the construction space, it's been tough going. And by extension, these guys haven't performed particularly well from a financial perspective.
Well, that's it. I'm keen to get into maybe the first one here. Italtile. In my mind, Italtile plays more also on the high-end side there. It's fancy taps, it's very fancy sinks there. But they also have not had a good time. In fact, when I was reading about them earlier, Chantal, every reporting period, it's a decline, and then the base is lower, and it's a decline from that lower base as well.
Yes, so Italtile is actually a pretty big business. They have several brands that they are working under. So if we think about Italtile, we think about the pretty showroom on Winnie Mandela Drive, and we think about the expensive taps and all the rest of it. But CTM is also part of the Italtile group, and Easytile as well. So they do cater across the kind of LSM spectrum. And then they also have a manufacturing arm that not only distributes into their own businesses, but also into other retailers as well. So I do think that they are less high end than what you would assume looking just at the name Italtile. Their performance obviously hasn't been great, but I mean, we know that in the context of broader macroeconomic pressure and the stuff that we mentioned in the introduction of the conversation, it's to be expected. I really like the business though, because even though they're going through tough times, they're so focused on still being super efficient, driving efficiency gains, trying to eke out margin gains where they can. And it will position them very well when the cycle starts turning, where we're actually at a point where we think we're very close or at or even slightly past the bottom. So that profitability will just improve because of that focus on margins.
Another interesting one, I guess, here, and I think we might speak about this with all of the companies here, cheap imports, that also playing a bit of a role there. In fact, if you do one Google search trying to look for something from one of Italtile's subsidiaries, you also get the option of a cheap Chinese import along with that search.
Yeah, and I think that this is an issue that has plagued South African retailers more broadly. I think particularly in the clothing retail space, we've seen Shein and Temu really starting to eat into the market share of the likes of a Mr. Price, and even to extent Pepkor and Jet, for example, in the TFG business. But we know that the South African authorities are taking note of this, and we have already seen in this week, I think, announcements coming through that there's a plan to start pushing up those import duties and to charge back for some of those kind of lower sized transactions. And I think that these guys could probably benefit from that as well. Maybe to a slightly lesser extent, you'll have to start looking at the impact of things like dumping in their space as well. But I'm sure that the complaints don't fall on deaf ears, because it's very important for us to have a healthy local industry. And we know manufacturing in particular is an area of the market that government is very serious about because of its impact on employment.
Another one with Italtile that they've raised here, the issue of the gas cliff in South Africa. Their manufacturing plant relying heavily on Sasol. We don't quite have a plan, actually, as a country to respond to that. We have until 2026, I guess. And I'm wondering about that, if there is room there in the balance sheet for them to start seeking alternatives for themselves. They might have to go independent here, and that might need, some capital.
Yeah, shame. They're also one of the first suppliers or clients of Renegen that have been having trouble actually getting to their full capacity in terms of their liquefied natural gas as well as their helium production. So yeah, I mean, it's definitely a concern and one that we can't ignore for too long. Again, I do think that the pressure is there. The pressure is being exerted on the relevant parties, and obviously there's a risk over here that something like that could become a huge issue. But the industry body, I think it's the Gas Users Association of South Africa or something to that extent, are lobbying exceptionally hard for this. Hopefully we'll have an announcement soon. Hopefully we'll have an announcement well before we actually hit the gas cliff. But I think it's important for companies that are big industrial gas users to highlight that and to keep on pushing.
Well, that's it. Let's talk Cashbuild now. I think a much bigger footprint there. Cashbuild also, I remember reporting on record profits during COVID-19. It just hasn't been that picture either.
Yes, so I mean, Cashbuild has really been struggling with weakness in the bakkie building market in particular, as well as in weakness in the DIY space. What has been very interesting about Cashbuild's results over the last few quarters, they do release quarterly sales numbers, is that we saw in the first quarter of 2024, so that's the 3 months to the end of March, that revenue actually turned positive for the first time in a very long time, and transactions through the tills increased as well after several reporting periods of persistent decline. So my thinking is that is also one of those signs that we have that we could see a turn in that hardware retail cycle. And Cashbuild is very well positioned to benefit from it, given its footprint and its relatively low price points. I also like the fact that they are they're cash based. They have the name cash in their name as well, the word cash in their name as well. And I think that they will benefit quite strongly from this turn in the cycle that we're now thinking could take place pretty soon.
Also interesting is that Cashbuild and Build, I think they both have this really interesting arrangement. I know it's used in lots of rural areas there where people can actually buy, their material over time. Really interesting arrangements that have been made. And I think that's a very interesting, I guess, a way to respond also to where people might be at this point. The fact that people can save up with them for the bricks, for the sand, for all of it really at their own pace.
Yes, and I think it's important to respond to your target market, because you have to be able to work with your clients and with your customers in order to be successful, particularly in rural South Africa, where Cashbuild has a pretty sizable footprint. So I think something like that will continue to help them, and I think it will be beneficial going forward as well.
With that said, Chantal, let's bring in Builders, because I guess Builders is within the SPAR group, and therefore it's a bit harder for us to get as much information as we would be able to get with an Italtile or a Cashbuild. But of course, they also came in really targeting that lower LSM.
Yes, so very similar business to a Cashbuild, and I think the support of the Spark Group perhaps helping them a lot in terms of marketing and working capital, things that Cashbuild won't necessarily benefit from. With Build It, what's been quite interesting is that it has actually been quite stable relative to the rest of the hardware retailers. I mean, even in the print that we got to the today, this morning, they only had one line on Build It, but they said that wholesale volumes declined by 0.4%. That tells me that the market is stabilizing somewhat, but Build It generally has held up quite well relative to the rest of the market. It is quite small in SPAR, so it's about 10% of South African revenue, and about 5% of the group's revenue, because we know that SPAR also has a pretty substantial footprint in England and Ireland, as well as in Switzerland. So take that into consideration. When you're buying a SPAR group for exposure to Build It, it is substantially diluted.
Of course, Chantal, this industry could benefit from lower interest rates, but I'm wondering there also, if there could be other catalysts for it, if at all. Just considering the fact that, like you said earlier, what we've seen flatlining here are disposable incomes, if not, not inflation eating away at them, but also just not salary increases, a business not doing that well, period. And I'm wondering if that might, result in the fact that there wouldn't be too many catalysts for the sector just to thrive again.
Yes, I mean, the combination of lower interest rates and lower inflation will definitely help disposable income. But I think that the big kicker here will be an improvement in GDP growth. I do think that we will get some external support from a GDP growth perspective over the next few years. And I mean, structural reforms, they've been slow, but we are making progress on that front. And that should lift GDP as well, and that will be supportive in itself. The other thing that I think is going to be very important is consumer and business confidence, because we do have a depressed consumer and business confidence in South Africa at the moment, probably even more so with the fact that we don't know what is happening on the political front. So my hope for the sector is that we do see some sort of clarity in terms of a way forward, a proper plan for a way forward, so that we can calm those fears of businesses and individuals, help confidence, and receive a tailwind from higher GDP growth due to reforms, with the addition of lower interest rates and lower inflation.
And with that said, for retail investors sitting at home, worth it to buy these counters? Are you saying that, we are at the bottom bout? So maybe the only way from here is up?
So to catch a falling knife, right, it's impossible to predict when the right time is to buy or sell. I think what you can do is you can take a long-term view and say, well, over the next 3 to 5 years, I would expect an improvement of the fundamentals driving these businesses. And now you have to start looking at the valuations. And all three businesses look quite attractively priced at the moment relative to their history, and just on a standalone basis. Italtile is probably the cheapest. At the moment, it's trading on a forward P of less than 7 times. Cashbuild is probably second cheapest. But then you also have to consider that Build It, as being part of the SPAR group, will benefit from a possible recovery in the broader SPAR business. And the fact that they just announced today that they are exiting Poland and they've actually found someone to take it off their hands, I think will be a really good catalyst for that business as well.
Well, Chantal, always a pleasure having you with us. So thank you so much for taking us through stock picks this afternoon. That was F&B Chantal Marx.